Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Friday. In today's program, I want to discuss the absolute carnage happening in the market at the moment. This morning, I spoke about the euro, which was under extreme pressure. And now I want to talk about the sterling. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Now, I did a video at the beginning of the week where one of my viewers said a word in one of the comments. He called this Destruction Week. That was on Monday, okay, before, obviously. And it couldn't be further from the truth, because this week has really been Destruction Week. It really has. And though I spoke a lot about the euro hitting a new 20-year low this morning, there's another currency which has hit a 37-year low. And basically, the UK has gone into complete, total meltdown. I'm talking about the financial markets here. The British pound US dollar has collapsed to the lowest levels since 1985. 1985. To put that in perspective, I was 7 years old when it was at this level. Now, okay, we already knew it was under pressure. Obviously, the Bank of England was disappointing yesterday. And yes, indeed, we've had a number or a good amount of negative economic data coming out of the UK. Energy crisis, cost of living crisis, inflation at 9.9% in the UK. And a very, very strong greenback as it's really enjoying its safe haven status. But what's just been the straw to break the camel's back today, and it's something which I warned about and I had been concerned about for a while, is the mini budget, which was announced today by the new government in the UK, the mini budget. And basically in this budget, it's the biggest tax cutting event since 1972. Since 1972. In a nutshell, this budget, the basic rate of income tax has been cut to 19 pence, and the 45% top rate of tax for higher earners has been abolished. Corporation tax is 6% has also been cut. National insurance increases has been cancelled. So basically, what they're trying to do is trying to encourage growth in the UK economy. But here's the thing: at the same time, they want to do this energy relief support package for households. One way of generating income for governments is through income tax. And the other thing about this budget cut or this tax cut is it's going to penalize lower income families. They're the ones who are going to suffer, not the rich fat cats, but the lower income families. At a time when things are already tough. Now, don't get me wrong. I'm a trader, so I'm a capitalist, and I'm a conservative. But I'm absolutely gobsmacked by this decision. Okay, absolutely gobsmacked, and so is the market. We were expecting something of this nature, but not to this magnitude, I don't think, because the way the market looks at it, this is something you do not do when times when you're already struggling. Yes, okay, you do certain activities to try and increase boost, but how are you going to pay for it? This means the market looks at it at the way that the UK can afford to pay this, especially, the state of things are with the UK at the moment, and trying to encourage foreign investment is going to be really difficult. Despite the fact there's something else they're cutting banker bonuses. Okay, I get that. That was always a sticking point with London anyway, because they didn't want to do a cap on bonuses because it encourages big banks to go there. So I sort of get that. But again, it's another sign of them trying to, look after the rich and push the poor down the other way. And like I say, I'm a Tory, but I'm totally gobsmacked by this. I really am, and ashamed by it. I really am ashamed by it. And like I said, the market is felt the same. The market is in total shock. And like I say, we've seen sterling drop 2% against the US dollar today. 2% against the US dollar on the back of this. And it's dropped 1% against the euro. And the FTSE 100 has fallen to its lowest level for more than 2 months. So let's have a quick look at the market as it stands. So this is the sterling as it stands. Okay. And though I have been a sterling bear for a long time, and I've said this before, that Jane Foley of Rabobank, she predicted, or she estimated that the sterling to fall to 110. And like I say, I could see that, but I didn't see it happening as soon as it has. Okay, so like I say, it's currently trading at 110, 175. Okay, it went to the low below 110, 10.07. So even below, nearly below 110. Now the market is in such a panic at the moment that the talk of it going to 1.05 against the dollar. So absolute carnage on this. Absolute carnage. And I know I've talked a lot about UK politics, because UK politics in particular can drive the market, as we can see today. Yes, the sterling was already under pressure for so many other things. It was already feeling the strain, but this was the straw that broke the camel's back today. And same with the euro sterling. Okay, it's way above 0.88 now. So they've seen a lot of euro strength against it. There is a little bit of a selling area around 0.0844, followed by followed by, if we have a look at on a daily, another level it needs to cap realistically is then around 0.88720. But like I said, euro as well has benefited against the sterling. But I really didn't think I'd be talking about the sterling trading around 110 today. I thought I'd be talking about it at some point in the future, but not today. Not today. So absolute carnage in the market today. And it just caps off a week which has been a real destruction week. And there's one currency to rule them all, so to speak. And there's one currency to rule them all, and that is the US dollar. It is really completely rules the currency kingdom. And if we have a look now, okay, it's not only sterling, it's absolutely dominating. It's actually the euro as well. Euro is 0.9733. All eyes now on potential level of it going all the way down to 0.95 next. That's next up in many analysts' minds. It's dominating. Like I said, the yen, okay, we've had a teeny weeny bit. We had the Bank of Japan intervention yesterday, which was a really dramatic move. But since then, the dollar's managed to fight its way back. Again, I'm interested in this trend line here. This is on a daily. Currently trading 143.06. I'd be interested to see what it does next. See if this trend line changes, means maybe becomes a bit of a support. Then we could see the dollar yen more range bound over the coming sessions. So that'd be interesting to look at. Say Bitcoin as well. That's again had a bit of a jump up today, but again that still remains risk off attitude. Currently trading around $18,438. And here's the other thing, S&P 500. Total risk-off attitude on the market. In fact, the S&P is set for its 5th week of losses out of 6 weeks. It's currently trading at 3,693 points. Okay, we all know what this is. This is all because the Fed, obviously, the market again is now beginning to believe that the Fed will not change their path. Will now carry on with the direction they want to do. There is no changing the Fed's mind. The market is finally waking up to this. And yes, we're having a lot more recession talk, a lot more. If we change it on the week, you can see what I mean. There you go. 5 weeks out of 6 of losses. And this is one of the heaviest weeks of losses it's experienced so far in the last 6 weeks. So, yeah, frightening. It's been, it literally really has been a destruction week. It really, really has. But anyway, let's talk about this week. I mean, what a week it's been. What a week, honestly. And I know, like I say, Philip, one of my regular viewers, he said a comment and he called it Destruction Week. And I liked it and I took it and used it for a video. But never has any man been right. This has purely been a week of destruction. And let's face it, we've had so much interest rate decisions. We've had obviously the SNB, they increased interest rates by 75. Riksbank, Swedish bank, increased interest rates by 100 basic points. Fed increased interest rates by 75. Bank of England increased rates by 50. But then we had obviously very hawkish talk from Powell again. Very hawkish talk from Powell, which spooked and scared the markets. Then we've had the Bank of Japan intervention, which obviously shook the market. That was the big mover yesterday. Then we had Euro collapse to a new 20-year high today, lowest level since October 2002. And to cap it all off, the sterling absolutely collapsing today to the lowest level since 1985. So, yeah. So that's been a major week. But guess what? We've got another week to come. Next week, we got Lagarde speaking a lot. She's going to be pushed on future interest rate decisions. US durable goods, German CPI, US GDP, UK GDP. What's that going to show? And EU CPI. Now, of course, I will do a watch along most likely on the US GDP. But I really think, obviously, the UK GDP is going to be something to keep a real close eye on as well. So we've got a really big week ahead of us. Please come and join me for those events. Market as it currently stands, all in the red. FTSE negative 2.5. DAX currently trading negative 1.71. Eurostoxx 50 currently trading negative 2.65. So yeah, please feel free to obviously ask me questions anytime or simply say hello if you like. Or share with me your opinions, what you think about this week. I mean, what's been the biggest surprise for you this week? I probably would say I anticipated the Fed spooking the markets again, and I anticipated 75, so I wasn't shocked by that. Bank of Japan intervention probably shocked me a lot. That surprised me. I was sort of, I did say, we talk about the dollar yen a lot. I was saying the only thing to change the direction would be intervention or a change in Japanese monetary policy, which they were never going to do. So they did intervene. Bank of England, I wasn't surprised by the 50, but slightly disappointed. I buy it. I thought they could have done a little bit more to try and give the sterling a little bit of boost at the time. The other big surprise for me today is certainly the euro collapse, but more about the sterling collapse. Because like I say, 110 has been talked about, but the fact we look like we're getting there so much quicker was a real shocker. But anyway, we've got a big week coming up next week. Just as exciting. In particular, US GDP and I think UK GDP. What is that going to show? What is that going to show us? So again, a very big week ahead of us next week. So please come and join me. Don't forget, as I always say, if you think of a question later, you can put it in the comment section, either on Facebook and YouTube. I will see them. and I will reply to them next time I go live on air, which of course would be Monday at 8 a.m. UTC to discuss European session. Let's see how that started next week. See if we can have a slight recovery off this horrendous week. And obviously then for the US session as well, I will obviously be doing a watch along again, probably for the US GDP, like I mentioned, sometime next week. And of course, I will do the next episode of hashtag Ask James. Topic of choice was selected today by a viewer, which is RSI. So I'll be doing an introduction to RSI. So please come and join me for that. But anyway, big exciting week ahead of us. So there we go. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you've liked this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it interesting, useful, and you put up with me, my over-the-top enthusiasm to the markets, I can't help because I simply love the markets, then give me one of these. It's nice to know that you like what I do. Can I then take this point to wish everybody a fantastic weekend and everybody to stay safe. Anyway, till next time, don't forget these little videos are for educational purposes only and in no way whatsoever should they be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.